Hello everyone and welcome to the Technical Day Trader. Today was a pretty interesting day. The Dow flirted with some all-time highs. And right now we're looking at the FAS in which I had two trades develop. One was bullish and the end of the day was bearish. And first what I'll do is just start out by saying that price action over the past 5 days has been very, very volatile, especially in the FAS. And because of that, usually I use Person's pivots as a tool to analyze and get in my risk profile before I get into positions. But there was so much volatility that they're kind of useless today. They're so far spaced apart that I was looking for pattern formations and other things that draw themselves on the charts with trend lines. And just as usually I use Person's pivots. You'll hear me look at them a lot, but today it was strictly chart pattern formation. So first things first, don't trade until 10:30. So after that, I'm looking at the FAS, and though it appeared it had a little kind of a double bottom action, I was still waiting. Nothing's really forming. It's just choppy trading. I don't get involved in that stuff. And then what it did was it made a high here and sold off down. And after experience trading, you can almost see these patterns develop. And the mentality in my mind this morning was, listen, I've seen this done before. We're going to make a low volume reach to touch those new highs. I've seen it before, and last time it immediately sold off when they touched two. So right now, I at this point, the Dow was, I think, like 80 points away from its all-time high. And just from the sentiment, I'm looking for bearish continuation patterns. So what I see forming here was an ascending triangle, and if you look in our chart patterns, I have a whole lot of stuff on ascending triangles, and it's a bullish continuation pattern. So what I was able to do was once I got that first point, now I'm looking for it because I see the kind of a shape of a triangle forming, and lo and behold, we get another little support point right here. Rockets up, secondary support point, and then we get the second resistance point. So now I'm actually able to draw the triangle. Now I've done this previously just so it's easier for me to explain, but at that point, when these two right here, I drew my bottom trend line, and that point right there and here, I was able to draw my top trend line. So now I'm able to build a risk-reward profile for myself, which is essential in day trading. So for trade one, it's going to be bullish. This is a bullish continuation pattern, is the ascending triangle. And what's great about it is, usually after a breakout, it will test that. It'll test resistance, turn support, and it did that. So once I was able to draw this line here, it's at 149. I said, okay, beautiful. I'm going to buy at 149 and put a stop loss in 10 cents below that. And then what I'm going to do is, and this is also in the chart pattern on the ascending trial, I'm going to draw this back to the point where it was at its widest width. And I'm going to take that and I'm going to extend it into the future. And that's what this 5 pixel wide green bar is. So that's exactly what I did. I wanted to get in at 149. I took this bar and I said, okay, roughly, okay, 150.50. Now that's awesome for me because of the fact that my risk reward profile just went 15 to 1. I'm risking 10 cents here, and I'm looking for a $1.50 return, which is, you gotta love that. So that was my first trade. It went over swimmingly. It actually, got me out relatively quickly. The thing just shot up to 150.50. And at this point, now we are seriously in the zone of reaching those highs. So once I'm out of that first position, you get your first trade out of the way. I'm looking for an ability to come in short, and I know that this pivot point up here is probably not going to be touched because right around the 150.50, we had like 40 points left to go for the Dow to touch its all-time highs. So I actually watched this, and when the Dow touched those highs, I went short right at that point. Now, if you don't want to do that, you could just continue this trend line on, and once it broke through the trend line, a nice point would be to get in short at 150.50. I just from experience got in a little bit early because that way I can use this pivot point as my stop loss, and that stop loss would be at 151.38. If you can see over here, 151.38. If it goes beyond that pivot point, then it's not going to sell off, and I need to get out of that position. So once that happens, I'm able to determine my risk reward. And in this one, it was 5-1 because I got in right at 151 and sold short. And again, you could wait till it breaks that trend line, and you sacrifice 50 cents. But in the long term, what's 50 cents? You're still building a profitable risk reward profile. And my target was that an extended trend line from the triangle that had formed, the ascending triangle that had formed earlier in the day, and that was at 149. So my risk reward's 5-1, and I'm in short, and the trade went profitably. Now, could I have held this overnight? Absolutely, but as you can see already, in the after hours, it's being bought back up after that 149 support level was broken. But I'm in the business of getting in and out, understanding my risk, understanding my reward, and just dealing with that. I don't want to hold trades overnight. Okay, so that's pretty much it for today. I hope you enjoyed it. We do have, again, a pretty in-depth chart pattern article on ascending triangles, which is what formed right here. And that's pretty much it for today. Hope you guys enjoyed it, and we'll see you soon.